the greatest credit bubble of human history, warning that the market will crash even worse than what it did in 1929. What's the crack, everyone? Welcome back to Buy, Hold, Sell, and I hope, of course, you are all well. In the background, you will see the week's performance. It was a good week, generally speaking. Another good week, might I add. And we will, of course, as always, get into all the indices. Last week, for myself, we started all the live streaming. Really appreciate everybody tuning in. I really enjoyed it, and I'm not going to stop doing that. Going to actually start ramping it up. Definitely going to be the format for the channel a lot more. But I'm trying to focus doing these week ahead videos as normal, because I feel that the content is better, more engaging. And I'm also going to be doing, as of tomorrow, my first proper video where we talk about different types of topics and themes. And I'm really excited about where the channel will be going. So please like and subscribe. We've also got some special stuff to talk about, but I'll get into that later in the video. So make sure to keep watching. But yes, let's have a look at this. We can see the EV plays and the banks, medical sort of stuff done exceptionally well, with our technology ones just taking a little bit of a cool off. And let's just get into the cool off before we get into anything too doom and gloom. The Magnificent Seven stocks are enjoying a blistering 2023. Here's what it would take for that rally to spill over into 2024. Better yet, I'm not going to get into it because I can actually bring up the charts, which will tell us a lot more. Now, Microsoft is now number one, and that is because you can see here it is just overtaking. It has just went into all-time highs, which is incredible considering how this market is. But that just shows you the power of the AI plays. We broke through this resistance, and we broke through it relatively easy, might I add, which is incredible. But you will see the RSI and MACD is now starting to show that it is well overbought. And if we actually look at this from the sort of 2021 down to sort of the lows, even if we go to sort of November of 2022, that year it sold off 35%. Now that was kind of your bear market, if you want to call it that. Us going into a bear market out of it, then we tried to get above, we dipped back into it. But from roughly this period of March, we have seen the stock over the course of 261 days shoot up in and around 48%, which is very, very strong. Plenty of people buying in and around these levels, which is showing you that the power of this AI run here. And the power of AI is not so necessarily Microsoft. It's actually to do with ChatGPT, OpenAI, and the partnership that they have. Microsoft is one that I'm waiting on a pullback for. Microsoft is in the right place here. OpenAI has changed. It's incredible how much it's actually impacted me, but I know it's changing everybody. And I can see so much like social media content and people writing blogs and all this. And it's all just coming from ChatGPT, which is just outstanding. I'm actually in the process of creating a website, mostly because I'm just so intrigued by ChatGPT, but I'm actually going to create a website using ChatGPT to try and actually get it all and try to work out how to code things that I understand at a high level, but have no idea how to do coding. ChatGPT can help me do that now. It's mind blowing. If you just don't know what it is, I highly recommend going and checking it out. But Microsoft, that run, I think will cool off. I think we're going to see a bit of a cool off, and we will get into the indices in due course. Now, a lot of you that don't know maybe about ChatGPT, I've actually used it here, for example, to do a summary of the week ahead. Investopedia, who we used every week to do a bit of a synopsis of the week ahead, no longer do their video or their blog posts for some reason. So I've actually stripped this from a long NASDAQ post and use ChatGPT to summarize it. So this I inputted, and if I scroll down here, ChatGPT is very kindly summarized this for us. So thank you for providing the economic schedule for the upcoming week. It appears to be a relatively light week in terms of major economic releases, with a focus on the existing home sales on Tuesday and several reports on Wednesday, including the FOMC minutes. Now we know how important they are. Mortgage purchase applications, unemployment claims, durable orders, goods, and the University of Michigan Consumer Sentiment Index. On Thursday, all US markets will be closed. Thanksgiving Day holiday. Both the New York Stock Exchange and NASDAQ will close early at 1 p.m. And analysts will likely pay close attention to the existing home sales report, gauge the health of the housing market, and the FOMC meetings will provide insights to the Federal Reserve's recent policy discussions. Additionally, the unemployment claims and durable goods orders reports will be important indicators for the overall economic outlook. That's just summarized what I would normally do, and that's just incredible, as I said, just to show you what ChatGPT can kind of do. You can now get apps that will generate images and tables for you. And I mean, I'm just exploring it to try and use it to create better content. It's kind of on trend because it's really what's driving the market here. This whole AI, open AI, chat GPT sort of craziness is what's driving it. Now, where is the market all sitting? Well, recent performance of the S&P has been very, very strong, gaining over 9% since last October and nearly 18% for the year, which is phenomenal. Again, going back into what Warren Buffett always say, 10% annual return would be very, very good, and you're up 18% for the year. So that is very, very good, considering there's so much bearish news out there, which we'll get into. And we're almost at its year high. Are we going to get a Santa rally? Are we in the Santa rally? I do fancy things just to be quite flat this week with the holiday season upon us. Signs of cooling in inflation have led to optimism that the Fed will hopefully pull back or pivot, as we've talked about before. I don't think that'll be the case. I can understand why people are thinking that. It's a settling. I mean, it's not going to be as aggressive as it's been. I still would fancy perhaps a pause. I don't know if we're going to see this side of Christmas a pivot. Could be proved wrong, but at this time last year, I was convinced we were going to get a pivot, and we really are out of time now. So it would be nice to be proven right, but don't think that will be the case now. I think we'll get slow and steady, and I could even see further rate hikes depending on what comes out of the war situation that we have. There is a lot of talk of the Iran and US tensions building up. If that was to escalate further and the oil supply stopped, oil, that whole sort of region is roughly, I think, 15 to 20% of gas and oil. If you lose that supply, oil goes up, inflation goes through the roof. So look, there's plenty of variables. It's hard to navigate through this, but we'll keep an eye on it as always. But all that aside, just based on what we have now and things don't get worse, the economy is actually holding up really, really well. But the obstacles remain. Treasury yields are still high, and we have valuations going through the roof. So they do need to get that under control. Optimism, though, is very much increased. I'm seeing that in the Discord. I'm seeing that in articles, news. You're seeing the optimism come back in for investors. And you're even seeing the likes of Cathie Wood and different fund hedge managers starting to buy a lot more and feeling a bit more confident with perhaps this soft landing. And you could just ignore all that and look at the historic stuff previously. Generally speaking, November and December do provide positive returns. And if you remember last year when we did the videos, we didn't actually get the good December. Santa Rally never really came. So on the laws of probabilities, we'd say again that this year it should be a decent run. But as I said previously there about valuations, the S&P currently is at a really high valuation, and now a lot of that will be the AI play. So let's have a look at the S&P, for example. It's the S&P index. Now, we're not at all-time highs yet, but I do, and I mean this, I've said it in the last few weeks, I do foresee us getting to new highs this Christmas, this side of Christmas, which is just crazy. And it does show you that there's still a bit of gas in the tank to go. But when you look at it, 6-7%, it's not a lot. You could do that easily in a couple of weeks. Potentially this week we'll see a bit of a cool off. Maybe just a sideways week. Let things catch up. Let the averages catch up and then push. So we will be watching that closely. But we are in this channel, and this will prove to be a bit of solid resistance for sure. So keep an eye on all of that. For me personally, in terms of a swing trade on the S&P and stuff, I would be definitely taking profits, if not closing out my positions here. And one of the big AI things that could sink or make it will be the likes of NVIDIA. I think their earnings call is coming up soon. So we will be covering all that in the Discord. But we do have also Black Friday. This is the season of good. This is the season of spending. All these data, all that data that comes back will be a real indication of where we're at with this economy. So there is a mixed bag out there. People are saying positive stuff. People are saying negative stuff. And this is the story which started off the greatest credit bubble of human history. One of Wall Street's biggest bears says a huge crash is coming as the markets are in the biggest credit bubble in history. And he warns that this is imminent. And I can see that myself, even with people that I know, and they're stretched. They're saying that, they're struggling to get to the end of the month before they get paid. They're on credit cards. All of these new payment options that will come out. Klarna, people can just spread their payments. I just feel like, so I could see how this just implodes and just explodes. Rising rates could trigger defaults, people not being able to afford these things when they come out of their 0% interest or their mortgage rates. It feels like something will pop eventually. And I would expect that to be in 2024, but it could push out for further. After this last year on reflection, it definitely tells me that things won't happen quick. Could be 6 months, could be a year, but I would fully expect when the mortgages and all the debt and everyone just gets really down and they're sick of being skint and all these job losses and AI comes into it. It's very obvious to me that in the next sort of 12, 18 months, something like that. It's going to come. And you see articles like this, here's why Americans with 1 million don't think they're wealthy. I'm not going to read that out, but it goes on to say all those types of things. If you look at the news articles and how people are finding, just speak to your friends and your family, I think everyone is going to say the same thing. They're feeling the pinch. Now let's have a look at the Nasdaq. The Nasdaq is also rallying hard, but not as favorable as the S&P. For example, there is a lot of growth stocks that have taken a friggin' pounding. Now I have noticed a lot bouncing back well, like Matterport and Teladoc stocks that we've covered in the channel, but it has taken a pounding, and that's why you'll see that for it to go to new highs, you are looking at around 18%, which is still a long way off for that kind of thing. Just like the S&P, we are overbought. So yeah, you're expecting a pullback, a cooling, I feel, this week with the shortened week. Just makes sense. Let the things catch up a bit, and then perhaps after the holidays. And after holidays, there always seems to be a bit of excitement. So after the holidays, perhaps we'll get that push. But this week, I think it'll be quite flat. So in conclusion, definitely there is a lot of people that are back and forth. There's extreme bulls, extreme bears, and everybody in the middle. It definitely is a mixed bag. There is huge factors with inflation, with the rising yields, interest rates, economic data, job losses increasing, which is definitely going to play a factor. But this softening, less tightening, with the minutes come out, investor sentiment will still be confident, I would imagine.